Today, we're getting into the MarketEdge Sentiment Index, our contrarian read on where the crowd is leaning. We'll cover the specific components we track, how we score them into a single number, and where to find it each week. Welcome to Technically Speaking with Mr. V, brought to you by MarketEdge, your source for unbiased technical stock research on over 5,500 stocks and ETFs. I'm Rachel, and joining me today is Mr. V, the founder of MarketEdge.com. If you're new here, hit that subscribe button so you never miss an episode. Mr. B, set the table for us.
All right. I got to give you a little bit of the background here. One of the more popular things on MarketEdge is our market timing models, and they are updated every Friday night. There's 3 of them, and you can find those in the Market Letter Weekly, which is, like I said, updated every Friday night. And here's a little commentary about what the market did over the previous 5 days of trading and our outlook for the future. Now, what you'll see underneath Market Outlook are the 3 market timing models we use to form our market posture, which is either bullish, bearish, or neutral. Now, the first is what we call our Cyclical Trend Index. The second is our Momentum Index. And the third, which we're going to talk about today, is our Sentiment Index. Now, what the Sentiment Index is designed to do is to measure either overzealous optimism or pessimism in the market. Now, one thing that happens, and it's been happening for 100 years, is people have a tendency to pick up one indicator to get a feel for the sentiment. Because the reality is, what you understand that the market is just basically a lot of people who are armed with money aimed at investing in stocks, or a lot of people that have stocks who have a desire to sell them and go to cash. So knowing that whenever the market gets heavy one way or the other, meaning either overly bullish or overly bearish, it's a signal that the trend is about to change. So think about this for a minute. If everybody's overly bullish, very bullish, that means all their money is invested in the market. How's the market going to continue up? Conversely, when everybody is extremely bearish, that means they've sold all their stocks. They're sitting there with a lot of cash. If you don't have any stocks to sell, how is the market going to keep going down? So what you're looking for are extremes in the market sentiment. And the way we did that is by tracking about 10 market sentiment indicators. You can see a little brief description of where the sentiment index is now. What we want to get to is the bottom where sentiment index components are listed. Now, I'm not going to bore you by going through all of these and telling you what they are, but basically there's 10 or 11 here that we track every week. And they have a reading, a number. And what we list is the current reading, the prior week's number. And you don't have to know what the number means. You can find out, and I'm going to show you where. And then the connotation. So, for example, the Fear and Greed Index, this is as of February 7th, 2026. It's 4680. It was 5920. Who cares? It's regarded as neutral. Okay. Conversely, there's the number of shares sold short on the New York Stock Exchange, up a little bit from the prior month's reading. So that would be bullish. And you go right down the list. Now, what happens after that is that, to make things very simple, MarketEdge provides finished technical research. When you go up to the Sentiment Index, and you'll see that as of this close on this particular Friday, it's bullish, meaning that each one of those indicators gets either a bullish, +1, 0, or -1 bearish value assigned to it every Friday night based on parameters, which I'm going to show you. And when you add them all up, you get a number ranging anywhere from maybe -5 up to, I think you can get a size +10, with the +3 and higher being bullish, minus anything, -1, -2, all the way down in bearish. So what we've done is taken a lot of technical indicators that measure sentiment, displayed them all for you. So you can, if you're into it, you can follow it. But we add them up in a way that we have a formula. And we'll tell you, based on these indicators, if the market is overly bullish or overly bearish. And again, it's a contrarian. The sentiment index is a contrarian indicator. So when it's over bullish, we probably don't like the market very well, assuming that our other market timing models are also either neutral or bearish. When it's over bearish, we'll probably like the market a lot. Now, to find these, what they all are and how they work, we can go to the bottom of the homepage. And that's where we have a free book that's available to everybody. And it's called The Market Edge Way. And in this book, we explain just about everything that's on the Market Edge site. But what you can see is exactly what I just told you. But what's listed here are the individual sentiment indicators. All right. And it tells you, like, for example, number 5, short interest ratio on the NASDAQ. It'll tell you which range is bullish, which range is neutral, and which range is bearish. All you need to know is each one of these indicators is getting a positive, negative, or zero number every Friday night. It's added up. It doesn't change that much. When this is important is when it gets to extremes, like +7, +8 on the bullish side, -5, -6. That's when you'll see it mentioned in the market letter, and also it'll factor in on the market posture every week. Now, to give you an idea where this all started, this started probably about 100 years ago. Folklore has it Joe Kennedy was getting his shoe shined in 1929 in September, and the shoe shine boy was telling him how much money he was making in the stock market, and supposedly Joe went and sold all his stocks and avoided the 29 crash. That's where Folklore has the beginnings of the sentiment index. We don't have the Joe Kennedy indicator in here, but they'll come out of the book. And again, where you want to go to get this is Market Letter Weekly. Comes out Friday night. And on the bottom, as you come down, you'll see the market timing models, which I showed you before, the cyclical index, which is positive. Momentum is neutral, and sentiment is -5. That's a big number. That means the market right now is very over optimistic. That happens to be a big negative for the market going forward. Rachel, you have any questions?
Actually, yes, I think we can take the contrarian premises given, but what I'd love for you to walk through is how this actually functions inside the MarketEdge system. What does the sentiment index affect across the platform, and what's feeding into it? Help us understand how this fits into the bigger picture of MarketEdge, please.
Well, it affects the whole thing. I mean, the idea behind all of this is to try to stay on the right side of the market. And it means be long stocks when the market posture is bullish, you've got about 70% of the game under control. And be out of the market or hedge when the market posture is bearish, you'll probably avoid most major setbacks. So now our timing models, I started publishing them back in 1993 with MarketEdge. So we got a 30+ year track record with this. And it doesn't catch every wiggle, but it does get probably about 75% of the major moves in the market. And that can save you a ton of money. It's easy for a stock to go down 50%, but because down 50%, it's got to go up 100% just to get even. So believe me, I haven't done this for 40 some years. Losing 50% could happen easy. Gaining 100% is tough. And if you go through these indicators, most of them won't make any sense to you. Like I showed you in the book, though, they're explained, and they give you the range that determines whether it's bullish, neutral, or bearish. And I'll just give you a couple ideas here. Here's bullish investment advisors. Okay, this is bearish. It's at 62%, up a little bit from the previous week. And that level is regarded as bearish. What that is a percentage of a select group of investment advisors' newsletters, market forecasts. So if they're all bullish, we'll get back to the beginning. Where's the money coming from to fuel the advance? So you get 62% bullish. And it's not very high, but it's high enough to merit a bearish rate. And that's the way each one of these indicators is set. For example, to put call ratio, it's also bearish at 0.98. That means that the crowd is buying a lot more calls, bullish, than they are buying puts, which are bearish. And that's how the whole thing works. And it's been working for a long, long time.
Perfect. That'll do it for today. And before we let you go, if you're not a MarketEdge subscriber yet, you can try the whole thing free for 2 weeks. No risk, no commitment. If it's not for you, just cancel before the trial ends and you won't be charged a thing. If you've got questions on anything we covered today, drop a comment below or send it to support@marketedge.com and we'll get back to you. And if you got something out of this video, give it a like and hit subscribe so you don't miss the next one. Thanks so much for watching, and we'll see you next time on Technically Speaking with Mr. V.